What's up guys, welcome back to my channel where we talk about entrepreneurship, where we talk about the stock market, where we talk about anything that has to do with money in the most simple terms. So if you thought this video was in any way helpful or informational, I would really appreciate a like and subscribe because it encourages me to make a lot more videos and a lot more content just like this. Not long ago, I made a video about why Warren Buffett decided to sell all of his positions in the US airline industry. It'll be right here if you guys want to watch it. But is that the same verdict for the Canadian airline industry, especially Air Canada? Now, in this video, we're going to go ahead and analyze Air Canada's Q1 earnings reports and updating our view if it's actually a buy still or not, and at what price point. Without further ado, let's get on my computer and analyze these reports. In my last Air Canada overview video, I had went over how I believe Mr. Calin Rovinescu, which is Air Canada's CEO, had won the best CEO in Canada for the past 2 years. Now, with that being said, I believe he is the best man for the job, considering the storm that we're in right now. The following are measures that Calin Rovinescu and Air Canada's board had actually decided to put in place to combat this situation. So these are the following measures that Calin Rovinescu and Air Canada's board has put in place to combat the incurred losses by the company because of this situation. All this information can be found in the earnings report that was published for Q1. So let's begin. Air Canada has reduced second quarter 2020 capacity by 85% to 90% when compared to 2019's second quarter. So basically what they're doing here is they're decreasing their business because they are foreseeing a smaller demand for air travel when things open back up. So this is just to go ahead and decrease their operating costs day by day. Next point. In March 2020, Air Canada drew a 600 million US dollar and 200 million Canadian dollar revolving credit facility to total an amount of $1.27 billion. So basically what this is they're getting line of credit that is untapped to have a safety net just in case this prolongs too long. The next point is in April 2020, Air Canada concluded a 364-day term loan in the amount of 600 million US dollars secured by aircraft and spare engines for net proceeds of 829 million Canadian dollars. So what this means is they're actually taking a loan at this time to that is secured on their aircrafts and spare engines to again make their safety net even bigger. The next point is in late April 2020, Air Canada concluded a bridge financing of $788 million for 18 Airbus A220 aircrafts. So again, what this means is they're taking even more debt to go ahead and have a bigger safety net just in case. So these 3 points are really just them taking debt, taking credits that are not really tapped into to have a safety net for the future because nobody really knows what's going to happen. Next point is in addition to cost saving associated with the significant capacity reductions, workforce reductions, and other mitigation programs, Air Canada has initiated a company-wide cost reduction and capital reduction program. So what this means is they're trying to decrease costs as much as possible, not only in operating planes, but also in hiring, in employing people by using programs that are available to them. The next point is Air Canada is accelerating the retirement of 79 older aircrafts from its fleet. So what I think this means is basically they're taking a lot of their aircrafts and putting them in storage just to, again, decrease their operating expenses and not have to pay for the operating expenses daily on these aircrafts. The last point here is Air Canada has adopted the Canada Emergency Wage Subsidy Program. And what this is like we spoke about it in my last video, the government has actually put in a program for companies like Air Canada to rehire their employees. And what the government is going to do for Air Canada is pay for 70% of their employees' salaries. Now that we know what their plans are to combat this situation, let's get into the financials. But before I do so, I really want to show you guys one quick important statement that I read from the earnings report. And here it is. Air Canada is actively monitoring the situation and will respond as the impact of the situation evolves, which will depend on a number of factors, including the course of the situation, government actions, and passenger reaction. none of which can be predicted with a degree of certainty, which basically means that this company doesn't truly know what will happen in the future. And it depends on those three aspects. But what we can do is touch on these points that they made and try to come to an assumption on the severity of their businesses. Okay, so let's see here. The course of the situation. How can we talk about this? Well, I think we do know that this global situation will slow down, and we can actually see that in these graphs that in Canada, the number of new cases has dropped dramatically, and it's the same story for the United States of America. However, fear is the problem here. And in my opinion, to eliminate fear and increase the demand for travel, there needs to be a vaccine. And unfortunately, in this article right here, you can see that it's going to take at least 18 months for the vaccine to be manufactured. But we don't even have a vaccine prepared yet. So it's going to take a bit longer than 18 months. So yeah, so for the foreseeable future, it's going to be a bit tough for Air Canada and other airline companies. Let's look at the second point. Government actions. I think the short-term future for Air Canada will be very dark. However, the government will definitely help the company. That is not a question, as they are the flagship airline in Canada. That's what I think. And the next point is passenger reaction. This basically means consumer habits post this situation and how it will affect the future demand for air travel. And I believe people will not want to fly. Not saying everyone doesn't want to fly, but most people will be afraid when it comes to flying before this vaccine. And now that we know that the company will decrease its capacity, we can confirm that Air Canada also doesn't believe that demand will be anywhere near where it was before this situation. So Air Canada knows that their demand is going to drop like crazy, which is why they're decreasing their operating expenses. And that's what we saw earlier in this video. Also, before we get into the financials, please keep in mind that Q1 reports take into account January, February, and March. Now that we know this, we can quantify the real economic effect of this situation by also keeping in mind that all of this only started to show economic effect in March. So what I'm trying to say here is out of 3 months in Q1, we are truly seeing the effects of only 1 month of demand drop in the financials, which leads me to believe that the Q2 earnings will be a lot worse than what they are right now. Okay, now without further ado, let's get into the financials. Let's get into the results of operations. Before we start, I want to say that this document compares both 2020 Q1 and 2019 Q1 and also gives us the dollar change between both. Okay, so let's begin. As we can see, Air Canada experienced a total revenue loss of $712 million compared to 2019 Q1. This is the result of the major decrease in passenger revenue, which is right here. So you can see here, passenger revenue decreased by $604 million. In Q2, I expect their total revenue to also decrease like crazy because of Air Canada's decision to decrease its capacity by at least 80%. So I know that they're not making much revenue right now because of the situation, but by also decreasing your operations, you are not only decreasing your operation expense, but you're decreasing your revenue. So I do believe that this right here is going to decrease a lot, which will in turn decrease this. Next point I want to talk about is the operating expenses. Continuing down the operation expenses, we can see that the Air Canada's operating expense actually decreased by $152 million compared to 2019's Q1. But let's look deeper into this. As we can see, Air Canada's fuel expenses had decreased because, as we know, and I made a video and I'm going to go ahead and put it right here on top, on this side. We saw that oil prices had actually decreased like crazy, which in return decreases Air Canada's fuel costs by $161 million, which is good for Air Canada. The next point I want to talk about is we can also see that the wages right here and salaries and benefits had decreased by $3 million, and I think it's going to decrease a lot more in Q2 because of the CEWS, which we spoke about earlier in this video, which is the government going ahead and paying for 70% of their employees' salaries, even if they are not working. Their operating expenses right here should decrease following their heavy capacity decreases. So not only the revenues are going to decrease, but also their operating expenses are going to decrease. So basically their company is becoming a lot smaller. So these numbers are going to be a lot smaller also. The revenue is going to take a hit, and the operating expense is going to get a lot lower, which is good for Air Canada. Following this, if we go down, we have an income loss of $433 million in Q1, and compared to Q1 in 2019, they lost $560 million in income. If you really take out a calculator right now, let's pull out the calculator, and we do 433 divided by 127, that gives us 3.4. What this number means is they have lost almost 3.5 times what they made in 2019 Q1 for their income, which is crazy. If we go down a bit lower, we can see here that their non-operating income had also took a hit of $843 million. But what's even more crazy is compared to their Q1 reports of 2019, they lost $1 billion in income, non-operating income. And this is due to the fact that Air Canada does have US debt, and unfortunately, I'm stuck with this when I order my goods. The Canadian dollar is really not strong right now, and so they had to go ahead and use a really heavy exchange rate, which took a really big hit to their total non-operating expenses, okay? Continuing over here, finally, their total net income loss is $1,049 million. That is crazy. But if you want to get even more crazy, you can see here that compared to their 2019 Q1 report, they lost $1,394 million. Wow, wow, wow. Now let's look into Air Canada's financial position. And before we begin, I just want to point out that this right here, this column, is Air Canada's end of Q1 numbers, and this column right here is Air Canada's beginning of Q1 numbers, and obviously this is the dollar change between both numbers, okay? So let's begin. So Air Canada reported a cash and cash equivalent number of $6.128 billion, which is a great sign because they increased their amount of cash by $239 million since the beginning of the quarter. Yet, its current assets, which is right here, had decreased by $477 million since the beginning of the quarter. And I believe this is because Air Canada is selling some of their investments to increase their cash positions for Q2. However, its total current assets, which is right here, had decreased by $238 million compared to the beginning of its quarter. Moving on, we can see here that Air Canada's total assets had went up by $577 million. And the reason for this is because of their pension assets, which gave them an extra $1 billion. So that's pretty good. Current liabilities, we can see that their current liabilities have actually decreased by $1,347 million. Because, as we said earlier in this video, Air Canada had to repay a huge portion of its US debts, which is a large part of this amount. Moving forward, we can see here also that in the long term, their long-term debts and their long-term liabilities, we can see that that also increased by $1,626 million, which again mostly amounts to the new secured and unsecured line of credits they received to increase their cash positions and increase their safety nets throughout this situation. Which brings me to a total liability of a $716 million increase from the beginning of the quarter. Now let's go into Air Canada's free cash flow. I just want to show you guys a really alarming figure to me. This quarter, they had lost $20 million compared to 2019's Q1 report of a gain of $3.111 billion. That's a dollar change of $3.131 billion. And I expect this number to be even worse in Q2. Even if their capacity shrinks, their revenue also shrinks, which will give them a hard time to pay off their non-operating expenses without dipping into their cash reserves. All right, guys, so what I see here is the stock price that's gonna go ahead and rocket down in the very short term, just like the US airlines. However, what differs Air Canada is two things. One, its liquidity and its cash reserves, and two, its market share in the airline industry in Canada. Well, not like the US airline industry where there's a lot of competition, Air Canada kind of runs a monopoly here. Well, there's another company called WestJet, but they're a lot smaller, and Air Canada was going to go ahead and buy them before the situation. Why market share is so important? Because I strongly believe that when fear subsides and demand rises for air travel, Air Canada will have a much easier time to go ahead and come back into their 2019 numbers. When you're investing, you have to be realistic. And in my last video, which I will put right here or right here, I did say that there's gonna be a long time for fear to subside and demand to increase. I think it's gonna be around 5 years for any decent ROI. Looking at how much money these companies are losing every month, that's really what I think is gonna happen. So personally, I will be buying stocks in Air Canada. I won't be buying a lot off the bat because I still think there's gonna be a lot of dark times ahead. I will be buying at around $10 to $12. I do think there's a lot of risk. Even Air Canada, even with its liquidity, it's still losing money. So I really suggest that if you're looking to buy this company, to be mindful of how much you're actually buying, because again, there's still a lot of dark times ahead for this company. Thank you for watching, guys. I really appreciate that you've lasted this long in the video. I have done a lot of research and a lot of work on this video, so I'd really appreciate a like and subscribe because it really encourages me to make more content just like this. Let's wrap it up. I really appreciate you. I'm gonna leave a quote at the end. Thank you for watching. See you in the next video.